The excellent gold analyst Ronan Manley anticipated enormous gold repatriations to be concluded before 2020, as he stated in this tweet. 2020 appears to be a milestone for gold repatriation. Bundesbank and now Austrian Central Bank 2020 system reset, and that was sent in 2015. Today we investigate the mass gold repatriation of 2020 ahead of the Great Reset. So let's dive on in. Now, this channel provides global macro insights and champions the importance of sound money in a world gone crazy, so please do consider subscribing. Let's just go back quickly to the 2008 financial crisis, which saw the introduction of the most outrageous monetary policy with near zero interest rates and a Fed balance sheet which subsequently went over the $4 trillion mark. Thereafter, the Fed and other central banks soon found themselves unable to actually ever normalize monetary policy or their balance sheet once again. So in this great article, Ronan Manley outlines some of these gold repatriations. The link is in the description. So back in 2013, the German central bank, the Bundesbank, began to move 700 tons of gold from vaults at the New York Fed and the Bank of France back to Frankfurt. At that time, they publicized this press release. By 2020, the Bundesbank intends to store half of Germany's gold reserves in its own vaults in Germany. The other half will remain in storage at its partner central banks in New York and London. To this end, the Bundesbank is planning a phased relocation of 300 tons of gold from New York to Frankfurt, as well as an additional 374 tons from Paris to Frankfurt by 2020. A little later, in May 2015, Austria's central bank announced that it too would repatriate gold stored in London to its vaults in Vienna in what it referred to as the 2020 gold storage policy. The Austrian central bank stated, by the year 2020, 50% of Austria's gold reserves are to be held in Austria, 30% in London and 20% in Switzerland. Manley believes that this may well have been a coordinated strategy to regain control of as much gold reserve assets as possible in advance of a pre-planned system reset deadline of 2020. Now, this clip highlights Ronan discussing the activities of these secretive organizations back in 2016.
So Ronan, what are some of the central bank trends that you are seeing here now in 2016?
That's a really good question, and it's, I think, critical to the gold market between now and 2020, because I actually think that if there is a reset of the international monetary system, 2020 seems to be one of the dates that it could happen on. For example, everyone is aware that Germany, the Bundesbank, Deutsche Bundesbank, has been repatriating some of its gold from both Paris and from New York, and this particular repatriation exercise started in 2013 and is ending in 2020. And I think it's interesting that they say 2020. So that could be a very subtle symbol of the fact that something is going to happen in 2020.
And so by August 2017, the German Bundesbank referred to a hard and fast deadline, announcing that it had completed its gold repatriation ahead of schedule. The press release used unusually precise and urgent language, which was also evident when the Austrian Central Bank used the same phrase in 2018. Other central banks were also involved, including the Dutch Central Bank in October and November of 2014, repatriating gold from the New York Fed to Amsterdam, but only announcing this upon the completion of this gold transfer. In fact, the Dutch Central Bank in April 2019 went as far as to say that gold is the anchor of trust for the financial system. If the system collapses, the gold stock can serve as a basis to build it up again. Gold bolsters confidence in the stability of the central bank's balance sheet and creates a sense of security. Poland and Hungary followed a similar pattern in the first 6 months of 2019. Poland announced a massive purchase of 100 tons, where transfers to Warsaw concluded in November 2019. Now, the rationale of the Polish central bank in doing this was, in its own words, because gold is the most reserve asset. It is a kind of confidence anchor, especially in times of tensions and crises. Gold secures Poland's financial strength, even in extreme unfavourable conditions. Meanwhile, Hungary increased its gold reserves tenfold, from 3.1 tonnes of gold to 31.5 tonnes. They swiftly had this repatriated from London. Now, interestingly, these countries are all contiguous neighbours, and this would seem to reinforce the highly coordinated approach they seem to have chosen to use in this gold repatriation. Indeed, it would seem highly plausible that they would agree their strategy at the Bank for International Settlements, the BIS, in Switzerland. Thus, the board of directors of the BIS would have had full knowledge of these developments. But given that meeting agendas and minutes are held as top secret, these documents will never be exposed. But the wider developments and behaviour of central banks during this period is well worth exploring briefly. We all know that central banks have, since the last crisis in 2008, remained net buyers of gold. While this has largely been led by Russia and China, other central banks started joining in on the action. Indeed, the period between 2011 and 2016 saw a significant bear market for gold, during which time central banks globally continued adding to their reserves. In fact, the first half of 2019 saw record purchases by central banks, which amounted to $15.7 billion, according to the Financial Times. And in the first 7 months of this year, central banks remain net buyers of gold, totaling 8.4 million ounces. But total demand for the year as a whole is forecast to swell to just 10.5 million ounces on a net basis. So central bank demand for gold is now cooling, as we considered previously in this video. Unquestionably, central banks have thus been shorting their own paper fiat currencies, and more specifically the dollar. They know that the monetary system was pushed to the brink of destruction in 2008. Despite the constant doses of quantitative easing, a day of reckoning appears to loom ever larger. Now, what's particularly striking about this period as well is that by the end of 2019, it was clear that Germany, Italy and Japan, major economies, had already entered a period of recession. And according to this gold antitrust action article by Brodsky and Quaintance from 2012, it described that banks and governments would have been working hard behind the scenes in a coordinated redistribution of gold monetary reserves in a more equitable manner. They state that the key to a successful transition is a credible monetary reset. Gold is the default collateral for money because it has a long and established precedent in this role. All that would be needed would be a fairly equitable distribution of gold among global monetary authorities, which is taking place now, and an agreed upon exchange rate vis-à-vis baseless paper. It would have to be an exchange rate at which central banks could successfully monetize assets by tendering for physical gold with newly manufactured paper money, an exchange rate high enough to attract enough gold to cover unreserved credit held in the banking system. And then came 2020. Now the Great Reset is revealed, while some of the details remain rather opaque. The real question now is, how long can the QE game continue to prop up our faltering economies? Do let me know your thoughts in the comments below. Thanks so much for watching. Do consider subscribing, and I'll look forward to seeing you next time. Bye bye.